Hello everyone, welcome back to Spiders Finance. 2023 so far has been an amazing year for growth stocks. The S&P 500, which I consider is more growth tilted, has returned upwards of 16% so far. The Nasdaq, on the other hand, has done double that of S&P 500, returning almost 33% year to date. If you look deeper, we can see this outperformance can be attributed to few selected stocks, primarily Nvidia, which is up 190% for the year, followed by Meta, more than 138% for the year, and Tesla, 112%, followed by your big tech companies like Microsoft, Apple, Google, and Amazon. So this year, 2023, has not been great for the value stocks so much. The value, which held well in 2022, has been the underperformer, which we can see here. The Dow Jones year to date just almost 4%. So you can see how different these three indices have performed so far in this year. Dow Jones almost 4%, S&P 500 just over 16%, and Nasdaq double of that, almost 33%. But that's how markets move. They favor one sector one year and go completely opposite the next, so on and so forth. But as a disciplined investor, as we keep on investing into good quality stocks and ETFs, one's portfolio will always do good in the long run. In today's video, I want to go over how much my portfolio made in dividends for the month of June. It has been my personal best so far in my investing journey. Without any further delay, let's get into it. As usual, we start with my M1 portfolio, whose portfolio value is $22,692. I'm up just over 2% over here, most of which I can attribute to the dividends in this portfolio. So year to date, the portfolio is up almost 4.5%. I would say in line with the Dow Jones so far this year, though that is not what I want to benchmark my portfolio against. When I look closer into my portfolio here, I can see my technology pie getting almost 25% for the year. My Vanguard total world pie over here, 13.5%, but it is dominated by the S&P 500. Materials, just over 8%. The dividend income pie, getting almost 6.5%. Consumer discretionary, just over 5%. Communications, almost 5%. Industrials, 1.65%. Staples, just over 1%. And then the negative performance, real estate almost flat for the year. Financials, down 1.5%. Healthcare, down more than 6.5%. And the energy and utilities pie, which was the leader last year, is down over 6.5%. Looking at the dividend activity here, so the month of June started off with Cummins at $2.16. Then Enbridge, $3.83, of which 57 cents was deducted as foreign tax. UPS, $1.81. Sherwin-Williams, 51 cents. JP ETF, $6.69. JEPQ, $5.49. Johnson & Johnson, $2.53. Landell-Bassel, $2.50. Pfizer, $2.51. Then Target, $1.93. 3M, $2.48. Walgreens, $2.39. Tractor Supply, just over a dollar. Whirlpool, $2.03. Consolidated Edison, $2.18. Prudential Financial, $3.21. Realty Income, $1.53. L3Harris, $1.37. McDonald's, $1.53. And Qualcomm, 92 cents. Then VYMI, the international ETF, $5.94. Likewise, VIGI, $2.75. SCHD, $8.65. VBR, the small cap value ETF, $3.55. VUG, the Vanguard Growth ETF, 86 cents. Then VTV, the Vanguard Value ETF, $3.20. Goldman Sachs, $1.81. T. Rowe Price, $2.45. Then towards the end of the month, we see Devo, $3.12. Bank of America, $1.98. Broadcom, $1.73. Digital Realty Trust, $1.57. PepsiCo, $1.66. And to round off the month, we have Union Pacific, $3.28. So this is my Google Sheet tracking all my portfolios. So this is my M1 portfolio sheet. Like you saw earlier, it has currently the value of $22,692, currently yielding just over 4%, with an annual dividend income of $918.19. So summing up all the dividends for the month of June, we finally get $90.61. Looking at a quarterly level, you finally see a value of $215.40. Annually, we are at $426.49 for 2023 so far. But like I always say, this is my favorite chart, the dividends growth by quarter. So we close out the quarter with $215.40, and we see here a nice laddered upward growth. So In my own portfolio, the 2023 Q2 quarter is the best so far, edging out 2022 Q4 by a couple of dollars. So looking at expected dividends in the month of July in my M1 portfolio, we can expect payments from Genuine Parts, Coca-Cola, Vichy, Altria Group, Merck, Medical Properties, Leggett& Platt, Medtronic, Realty Income, as usual, the monthly dividend payer, WP Carey, Comcast, Cisco, Oracle, Edison International, and finally JP Morgan. So adding up all this, we see upwards of $50 in expected payments. So those alongside my JP and JEPQ ETF payments, I should see value higher than what it was in last July and also in the first month of last quarter, that is April. So I should expect to see these graphs going upwards in expected fashion. Next is my fidelity portfolio, whose current value is $31,241, currently yielding 2.83% with an annual income of $883.34. Looking at the dividends in this portfolio for the month of June, we have a bunch of payments here, starting with WC Energy, $3.54, Pinnacle West, $2.94, Kroger, $1.29, Ford, $15, Aflac, $1.64, Parker Hannifin, $1.57, Southern Corp, $2.28. Looking at other major payers here, we have the DIV ETF paying $7.06, then DGRO, $5.27, the SPYD ETF, $4.73, BYM ETF, $6.29. The highest payer here has been the CHD ETF, $39.83. Then we have Corning paying us $28, and the money market fund SPAXX paying us $70.48, wherein it collects an amazing 4.75% of interest to all the cash sitting in this account. And finally, Bank of America paying us $22 towards the end of the month. Adding up all those values, we come to a final amount of $205.96 for the month of June, which is the best month ever in this portfolio. You can see the quarterly value going higher here, $298.83. Speaking of annually, we have crossed for the entire 2022. And look at this favorite chart of mine, the dividends by quarter, all the way from just under $170 to almost $299. Really happy with this growth here. Looking at expected payments in the Fidelity portfolio for the month of July, here we can see payments expected from Huntington Bank shares, Best Buy, Broadridge, Chubb, American Tower, International Flavors, Philip Morris, Amphenol, Franklin Resources, Main Street Capital, Mondelez, Federal Realty, US Bancorp, IDEX Corp, the Triple Qs, and finally Toronto Dominion. Summing up all these, we get just over $75 in payments. That should start my Q3 in a good way here. Excited to see what Q3 brings. And then finally, the third part of our portfolio, which is Acorns, whose current value is $5,873.70. Like I always say, this is my set it and forget portfolio where I invest $25 every week, along with all the roundups that get accrued alongside my purchases. So roughly totaling around $125 invested into this portfolio every month. I've made videos in the past showing how Acorns is a very good vehicle for somebody who's starting new into the investing world. This is what I started my investing, and I still like it for what it does. So this is my Acorns dashboard tracker. So this portfolio currently yields 1.97% with an annual income of almost $116. The simple 4 ETF setup with the S&P 500 VOO taking up 55%, then IJH, which is a mid cap, 10%, IJR as a small cap, 5%, and finally IXUS, this is the international, at 30%. And the best part of it is it just rebalances as simply as it can. When I say rebalance, what I mean to say is your investment amount gets allocated into one of these ETFs to make sure none of this is overweight. So in this portfolio, we earn $28.51 as dividends for the month of June, of which majority was from IXUS for $25.80. Then IJH paid us $1.69. Then IJR paying us $1.02. Now VOO for the second quarter of the month, it pays out in July. As you can see here, I should be expecting payment on July 5th for just over $12.50. That should keep all these charts ticking into Q3. Finally, my overall portfolio dashboard, the current value of just over $56,500, yielding 3.39% with an annual income of $1,917.50. I'm in the green here, just under 1%. Nothing to brag about, but still good to see the portfolio in the green. So here, adding up all the dividends for the three portfolios, we get a final value of $325.08 overall for the month of June, the best month ever. Really happy to see this. All the graphs are trending in the right direction. The best among those is this dividends growth by quarter. You can see here a huge jump from $394.50 in last quarter, that's in Q1, to $542.74 for Q2. Looking at other dividend metrics, we can see our current dividend income by month, it's almost $160. By weekly, it's almost $37. Daily, it's $5.25. On hourly basis, like a 24-hour basis, that would be 22 cents. But if you look at a work hour basis, like a 8-hour work day, that would be 92 cents. So as we keep growing this portfolio, as the dividend keeps growing, the overall idea is that in 10, 20, or 30 years, by the time it's retirement age, this work hour value should be high enough to survive off. That's the overall goal. Yeah, we've started the journey. It's going well. We'll keep continuing to do invest into quality companies and ETFs. As long as we do that, we keep stay disciplined. These numbers should tick along in the right way. That's all I have in this video for you all. Hope you all found it valuable to see this portfolio take shape every month that I keep discussing this with you. Until we meet in the next video, try to do as much as possible to be financially healthy and keep taking those strides towards financial freedom. See ya. Bye.